Hello friends, how are you all doing? I hope you all are doing really very well. So friends, in this session, let us quickly revise entire GST for your CA intermediate in about 45 minutes to 1 hour. Yes, the revision will be what? Revision will be of Section 7 to Section 53 of CGST Act and Section 10 and Section 12 of IGST Act. So your entire syllabus will get done in this next 45 minutes to 1 hour. So guys and girls, ladies and gentlemen, focus 100%. Section 7 of CGST Act, scope of supply. Subsection 1, what is supply? Clause A, there should be activity for consideration and it should be in the course or furtherance of business. Clause B, there should be import of service for consideration. It may or may not be in the course or furtherance of business. Clause C, there should be an activity, okay, as given in Schedule 1 and it may be without consideration. There are four activities in Schedule 1. They are called as paras. Okay, those paras are para 1, permanent transfer or disposal of business asset on which ITC has been availed. Para 2, supply of goods or services between related persons or distinct persons, in which there is a proviso. Proviso is that there is a supply between employer and employee. Gift is given by employer to employee. It will be not called as supply if the value of gift between an employer and an employee during a financial year is up to rupees 50,000. Then para 3, supply between principal and agent. And lastly, para 4, import of services from related person or own establishment from outside India. Then guys, section 7, subsection 1A, certain activities are called as supply of goods but not supply of services, and certain activities called as supply of services but not supply of goods. This clarification is given in Schedule 2 for some activities. Few of the important activities are like this. Construction of immovable property. Construction of immovable property is supply of service. But guys and girls, ladies and gentlemen, what happens that when 100% of the amount is received after occupancy certificate, then it is neither supply of goods nor supply of services. Okay, then so such serving of food in restaurant is a supply of service. Works contract is a supply of service. So such interesting activities are given in Schedule 2. Then talking about Section 7, subsection 2. Section 7, subsection 2, what is not supply? So specifically you have to refer to negative list, that is your Schedule 3. Okay, so service given by employee to an employer. Okay, that is one falling in negative list. So many other items in negative list. Then section 8, taxability of composite supply and mixed supply. Composite supply defined in section 2 clause 30, mixed supply defined in section 2 clause 74, and principal supply defined in section 2 clause 90. Okay, so what is composite supply? Composite supply means multiple supplies of goods or services packaged together, done in combination for a single price. Do you remember this? Yes, in which one of the supply is principal supply, and you know this is naturally bundled in the ordinary course of business. Example I had given you that Indigo Airlines has sold you flight ticket which is inclusive of meal. So here principal supply is air travel and ancillary supply is of meal. Then talking about mixed supply is multiple supplies of goods or services done together for a single price where none of the supply is principal supply and they are not naturally bundled in the ordinary course of business. Mixed supply is treated as supply of that supply which attracts highest rate of tax, and guys, composite supply is treated as supply of principal supply. Then talking about section 9, levy and collection of GST. Section 9 subsection 1, taxable person is liable to pay GST. Taxable person means one who is registered in GST or liable to be registered in GST. GST will not be chargeable on alcoholic liquor for human consumption. The maximum rate of GST that government can set by notification is 40%. Okay. Then GST will be collected, as we discussed, from taxable person. It will be collected in the manner as prescribed, and the rate of GST will be as per notification. The value of supply will be as per section 15 of CGST Act. Section 9 subsection 2, 5 fuels are temporarily kept out of GST. Which are those 5 fuels? Petroleum crude, natural gas, aviation turbine fuel, then motor spirit and high speed diesel. Then 9.3, in notified cases, it is liability of recipient of supply to pay GST. It is called as reverse charge mechanism. 9.4 is also talking about reverse charge mechanism, and 9.5 is liability of e-commerce operator when notified services are supplied through e-commerce operator. Which are those notified services? Number 1, accommodation services provided by unregistered person. Number 2, cab services. Number 3, your housekeeping services provided by unregistered person. Number 4, restaurant services. And lastly, bus operator services provided by other than company. In all these cases, what you have to understand is, if ECO does not have a place of business in India, then the representative of ECO in India will be liable to pay GST. If there is no representative of ECO in India, then ECO shall appoint a representative in India for the purpose of paying GST. Section 10. Section 10 of CGST Act is composition levy. Composition levy. Who is eligible for this composition levy? Any registered person whose aggregate turnover in the preceding financial year is not exceeding rupees 150 lakhs slash rupees 75 lakhs. Isn't it? 75 lakhs in case of 8 special notified category states: AUMMMNST, Arunachal Pradesh, Uttarakhand, Manipur, Mizoram, Meghalaya, Nagaland, Sikkim, Tripura. Getting it? If 10-1 composition scheme I am eligible for, then as a manufacturer, the rate of GST is 1% of total turnover. As a trader, it is 1% of taxable turnover, and as a restaurant service provider, it is 5% of turnover. Okay, then, but when I'm going in 10-1 composition scheme, I have to remember one important thing. It is that there is a limit of services that I can give. That limit of services is 10% of turnover of preceding financial year or rupees 5 lakh, whichever is higher. Clear? Then going for 10-2A, who can opt for 10-2A composition scheme? So basically 10-2A composition scheme, you can say, is preliminarily for service providers. So whose aggregate turnover in the preceding financial year is not exceeding rupees 50 lakhs and they are not eligible for 10-1 composition. Okay, those who are opting for this 10-2A composition scheme, the rate of GST for them is 6%. So whatever rates of GST we have discussed in composition scheme right now, they are all of CGST plus SGST. As per section 10.2, the following persons are not eligible for composition scheme, even if their aggregate turnover is not exceeding the limits which we discussed. So who is not eligible at all for composition scheme? Number 1, if he is engaged in interstate outward supply. Number 2, if he is engaged in manufacture of what? Manufacture of ice cream, pan masala, tobacco substitutes, aerated water, fly ash bricks, fossil bricks, and basically your building bricks. And okay, so building bricks, so basically your construction material. And then those who are CTP, NRTP, those who are engaged in supply of those goods or services which are not leviable to GST, and those who are engaged in supplying goods or services via ECO. Going ahead, there is one proviso in this. Proviso is that registered person will not be eligible to opt for composition scheme unless all registered person under that PAN opt for composition scheme. Then composition scheme will lapse. When it will lapse during a financial year? It will lapse when aggregate turnover exceeds 1.5 crores slash rupees 75 lakhs slash rupees 50 lakhs, as the case may be. And those who have opted for composition scheme cannot avail ITC. Further points that we have to understand in composition scheme is the tax under composition scheme cannot be collected from recipient of supply. I will have to issue a document called as bill of supply while making the sale in the composition scheme. The rates of tax of this composition scheme are applicable only on outward supply, not on the inward supply. Further, the tax and composition scheme is to be paid on quarterly basis. It will be paid by 18th of the month following the quarter. And then details of this tax will be given in GST CMP 08, and one return will be filed by 30th April after the end of financial year in GST CMP 04. So this way you can do the provisions of section 10. One thing I forgot to tell you, that is what is the definition of aggregate turnover. Okay, so definition of aggregate turnover is given in section 2 clause 6 of CGST Act. What is aggregate turnover? Aggregate turnover includes intrastate supply, interstate supply, taxable supply, exempt supply, exports of all persons having same PAN to be computed on all India basis. But what it excludes? It excludes number 1, GST, number 2, any inward supply on which tax is payable on reverse charge basis. Special point for section 10. Explanation is given in section 10 that for calculating this aggregate turnover for section 10 eligibility, you will exclude interest on FD. Okay, further this interest on FD will be excluded while calculating the turnover on which tax is payable under section 10. Also, interest on FD is to be excluded while calculating the quantum of services provided to determine whether I am within the limit of 10% or 5 lakh, whichever is higher. Going to section 11. Section 11, exemptions under GST, which is to be read with notification number 12 by 2017 CT. Okay, few of the important services that we have to do here is services given by charitable trust, which are in relation to charitable activities. Second, education related services. 3, healthcare services. Okay, 4, services given by performing artists. 5, resident welfare association related services, you know, where the per month per member it is not taxable if the amount is 7,500. Okay, so and apart from that, goods transportation service, passenger transportation service are few of the other important services that we should do. Further, section 12, section 13 of CGST Act. What is section 12? Section 12 is time of supply of goods. Section 13 is time of supply of services. Both together have common subsections. Subsection 1, introduction. Subsection 2, forward charge mechanism. Subsection 3, reverse charge mechanism. 4, vouchers. 5, residuary. 6, additional consideration by way of interest, late fees and penalty. Subsection 2 of section 12, time of supply of goods in case of forward charge mechanism. Date of issue of invoice or the last date when such invoice should have been issued as per section 31, whichever is earlier. Okay, then so when actually the invoice should be issued? If supply involves movement of goods, invoice should be issued before or at the time of removal of goods. If supply does not involve movement of goods, then invoice should be issued before or at the time of making such goods available to the recipient. 13.2. 13.2 Time of supply of services under forward charge mechanism. If invoice is issued within 30 days / 45 days in case of banking service from the date of provision of service, then it will be date of issue of invoice or date of receipt of payment, whichever is earlier. But if invoice is not made within time, then time of supply is date of provision of service or date of receipt of payment, whichever is earlier. What is the date of receipt of payment here? So date of receipt of payment is the date when the entry of the payment is passed in the books of accounts of supplier, or the date of credit in his bank account, whichever is earlier. Going ahead, there is a proviso in this. If against an invoice a advance or excess amount up to rupees 1000 is received, then time of supply for this will be the date of issue of invoice in which this amount will be adjusted. This particular proviso is to be applied at the option of the supplier. Talking about now 12.3. 12.3 is time of supply of goods under reverse charge mechanism. What is that? The date of receipt of goods, or the date of making payment, or the date immediately following 30 days from the date of issue of invoice. I hope guys you are able to recollect this. Then 13.3. 13.3 Time of supply of services under reverse charge mechanism. What it is? It is date of making payment or the date immediately following 60 days from the date of issue of invoice. Is it absolutely clear to all of you? Yes, sir. What here is the date of making payment? Here date of making payment is the date when the entry of payment is passed in the books of accounts of recipient of supply, or the date of debit in his bank account. But do you remember 13.3 has a proviso? Proviso is that if service is received from associated entity outside India, then time of supply is date of entry of that expenses in the books of accounts of recipient of supply, or the date of making payment, whichever is earlier. Subsection 4 in section 12 and section 13, it is common. It is vouchers. Provision is common. If supply is identifiable at the time of issue of voucher, time of supply is date of issue of voucher. Guys, if supply is not identifiable at the time of issue of voucher, time of supply is date of redemption of voucher. Wonderful. Then subsection 5, residuary. Residuary means if you cannot be covered in subsection 2, 3 or 4, then time of supply will be determined as per subsection 5. Okay, what is time of supply here? If that particular person is required to file GST return, then the due date of filing of that GST return. But if he is not required to file GST return, that is in any other cases, it will be the actual date of making payment of GST. Lastly, subsection 6, if additional consideration is recovered in the form of interest, late fees, penalty, then the time of supply will be the date of receipt of such additional consideration. Wonderful. Going to section 15. Section 15. Valuation. Value of supply. Assessable value shall be transaction value, that is price actually paid or payable for supply of goods or services or both, where supplier and recipient of supply are not related to each other and price is sole consideration. Agreed? All of you agreed? Yes, sir. Agreed. Then guys, this was your subsection 1. Subsection 2, what this transaction value shall include? This transaction value shall include A, B, C, D, E. What is A? Taxes other than GST. B, any amount incurred by recipient of supply on behalf of supplier. C, guys, what is C? C is expenses incidental to supply. D, interest, late fees, penalty recovered from recipient of supply for delay in payment. And E, subsidies linked to the price of the goods other than central government and state government subsidies. Section 15 subsection 3, exclude discount. Which discount is to be excluded? A, discount which is given before or at the time of supply B, discount which is given after supply. To exclude discount which is given before supply or at the time of supply, it should be recorded in the invoice. To exclude discount which is given after supply, three conditions have to be satisfied. Number one, the terms of the discount should exist at the time of supply. Number two, the discount should be related to the invoice. And lastly, most important, input tax credit as is attributable to the discount should be reversed by the recipient of supply. Talking about subsection 4, if AV cannot be taken as TV, valuation will be done as prescribed, that is in the rules, that is rule number 27 to 35, that is kept at your final level. 15.5, in case of notified goods, value will be as prescribed. Then, guys, section 16, input tax credit, eligibility and conditions. 4 subsections in this. Who is eligible to take ITC? Who is eligible to take ITC? Any registered person with respect to GST payable on purchase of goods or services or both which are used or intended to be used in the course or furtherance of business. I hope guys you are following this. And then section 16 subsection 2, what are the conditions to be satisfied to avail ITC? Conditions to be satisfied are, he should be in possession of tax invoice, the goods or services should be actually received, the tax on the supply should be actually paid to the government, and he should have furnished GST return. Apart from this, the details of outward supply should be given in his statement GSTR 1 by the supplier, and this should be reflected in statement of inward supply, that is GSTR 2A 2B of the recipient of supply. Then in this subsection 2, guys, there are 3 provisos. First proviso, if goods are received in lots or in installments against an invoice, then ITC can be claimed only on receipt of last lot or invoice. Isn't it? Then friends, talking about your second proviso, the payment should be made by recipient of supply to the supplier within 180 days from the date of issue of invoice. If it is not made, then amount equal to ITC availed shall be added back to the output tax along with interest at the rate of 18% per annum. Clear? For the last 180 days. And finally, your third proviso, if subsequently recipient of supply makes payment to supplier, then he can again avail ITC. So is this absolutely clear to all of you? There is one explanation in section 16, subsection 2, clause B. That is, A is selling goods to B, B is selling goods to C, but B told A to directly send goods to C, bill to ship model. So in such cases, when C receives the goods, it is deemed that B has received the goods. Thus, he satisfies the condition that he should have actually received the goods and he can claim ITC. Section 16, subsection 3. Section 16, subsection 3. If supplier, means if registered person claims depreciation under Income Tax Act on the GST element of capital goods, then ITC of such GST cannot be availed. No double benefit of, under income tax, you can claim depreciation on GST, and in GST you can also claim ITC. It's not possible. So no double benefit allowed. And lastly, section 16 subsection 4, the last date of availing ITC. What is the last date of availing ITC? 30th November. Which 30th November? Following the end of the financial year to which the invoice pertains, or actual date of filing annual return for the relevant financial year, of course, whichever is earlier. Did you understand? And whatever ITC you have availed, that ITC goes to nothing but e-credit ledger. Now, coming to 49.5, you have now availed ITC. Now utilize that ITC. How to utilize that ITC is given in 49.5. According to 49.5, first you will exhaust ITC of IGST. ITC of IGST shall be first utilized to pay output tax of IGST, and balance, if any, will be utilized to pay output tax of CGST and SGST in any order and in any proportion. Then utilize ITC of CGST to pay output tax of CGST, and balance, if any, to pay output tax of IGST. Then touch ITC of SGST, utilized to pay output tax of SGST, balance if any to pay output tax of IGST. But in no case ITC of CGST can be utilized to pay output tax of SGST, and ITC of SGST utilized to pay output tax of CGST. Going to section 17. Section 17 subsection 1, 2 talk about apportionment. So what happens if any inputs are used commonly for personal use as well as business use, then ITC will be admissible only to the extent used in business use. If inward supply is commonly used for what? It is commonly used for making taxable supply, zero rated supply as well as exempt supply, then ITC will be admissible only to the extent used in taxable supply including zero rated supply. Wonderful, wonderful. Then guys, 17.4, apportionment in case of bank and financial institutions. This is optional for banks or financial institutions. So they may follow 17.2 or they may come to 17.4. If they come to 17.4, what they have to do? Whatever is the eligible ITC, they have to avail 50% of that and 50% shall lapse. But there are two provisos in this. Once this option is exercised, it cannot be withdrawn during remaining part of financial year, isn't it? And secondly, if with respect to the input tax credit that is on goods or services availed from own distinct person, means own branch or own head office that is having same PAN, then on this restriction of 50% does not apply. ITC can be taken to the extent of 100%. 17.5, VIMP, very important, blocked credits. How many clauses? Clause A to clause I. Clause A, block ITC on motor vehicles used for transportation of passengers, approved seating capacity not exceeding 13, including driver. Okay, but there are exceptions to this. Exceptions are where that motor vehicle is used for making outward taxable supply of training in driving such motor vehicles. Secondly, it is used for what? It is used in outward taxable supply of transportation of passengers. And lastly, it is used in taxable outward supply by a person who is dealing in these motor vehicles, means for sale of these motor vehicles. Okay, then clause AA, block ITC on aircrafts and vessels. Okay, block ITC on aircrafts and vessels. Again, there are exceptions to this. Exceptions are similar exceptions as we discussed for vehicles. Okay, then going to clause AB, block ITC on repairs, maintenance, insurance services with respect to such vessels, vehicles, aircrafts on which ITC is blocked. Okay, going ahead, clause B, block ITC on catering service, health service, life insurance, health insurance, food and beverages, leave travel concession extended to employees on vacation, block ITC on all these things. But in this also ITC will be admissible if inward supply of this category is used to make taxable outward supply of same category or taxable composite or mixed supply which involves one of such inward supply. Further, going ahead, what I want to tell you is, if employer is giving any benefit to employee which is under government obligation, then again on this ITC will be admissible. Going ahead, clause C, clause D, block ITC on works contract service or any goods or services which are used in construction of an immovable property. Do you agree with me? Yes. So friends, construction here means any expense that you are doing on an immovable property which you have capitalized in the balance sheet, which you have capitalized to the cost of immovable property. Agreed? All of you agree with me? Yes. Clause E, if you are purchasing any goods or any services from a person who has opted for composition scheme, ITC is blocked. Further, okay, further, clause FA, very important clause. Do you remember clause FA? Any goods or services or both which are purchased and used for CSR activities as per 135 of Companies Act, ITC is blocked. Clause G, any goods used for personal consumption, goods or services used for personal consumption. Clause H, any goods destroyed, damaged, lost, okay, or given away as free samples, ITC is blocked. Clear? All of you are able to follow all these things? Yes, sir. So at least do this much in your 17.5. Section 18, ITC in special circumstances. What are the special circumstances? You are doing a transition of being from being unregistered, now you are getting registered. From being unregistered, now you are getting registered in clause A on compulsory basis, clause B voluntary basis. Next transition is given in clause C. First you are paying tax under section 10, now you are going in section 9, and D transition is that first your finished goods were exempt, now your finished goods are going to become taxable. In all these four transition, on the day preceding the transition date, you have some inputs in stock. Inputs in stock as such, inputs in WIP and inputs in finished goods. You have to take ITC of GST paid on these inputs. Okay, you can take that as per 18.1. Further, in the clause C and D, you can also take ITC of what? You can also take ITC of capital goods in stock. But of course, that will be reduced by 5 percentage points for every quarter or part thereof. As per 18.2, 1 year should not have lapsed from the date of issue of invoice for claiming any of the ITC of 18.1. 18.3. What is 18.3? 18.3 is if I am transferring my business to you, then whatever is my ITC, that becomes your ITC. There is one condition to be satisfied. What is that condition? All the liabilities of transferor should become liabilities of transferee. 18.4. 18.4, guys, is exactly opposite transition of 18.1 clause C and clause D. Meaning to say, first I was in section 9, now I am going to section 10. Means from normal levy, I am going in composition levy, and further, next one, first what goods I was selling, they were taxable, now they are becoming exempted. So government's problem is that on the date preceding this transition date, I have some inputs in stock on which I have availed ITC. Now government wants me to calculate that and pay it to the government. How to pay it to the government? By using your balance in ITC. Okay, and if any amount is remaining, that will be paid in cash. But after using your balance in ITC, if still there is any balance in ITC, that will lapse. Clear? Is it clear to all of you? Also, if there are any capital goods in stock on this transition date, you will pay back the amount of ITC that you have availed. How will you calculate here? You will calculate here on monthly basis, on the number of months basis. The overall useful life of asset is 60 months. Now out of 60 months, how many months are remaining? To that extent, ITC you will pay back. Getting it? All of you got this point? Then guys, 18.6, most important in the series of section 18, there are some capital goods which you have purchased and you had availed ITC on that. Now those capital goods you are selling. So how much GST you should pay on sale of such capital goods? Higher of following two. A, ITC availed minus amount computed at 5 percentage points for every quarter or part thereof, or transaction value into rate of GST, whichever is higher. Clear, guys? Are you with me? And then there is a proviso to 18.6. That proviso says that if molds, dies, fixtures, tools, refractory materials, if they are sold as waste and scrap, then directly the tax payable will be transaction value into rate of GST. Agreed? Then guys, section 22 to section 30. What is section 22 to section 30? Section 22 to Section 30 talk about registration under GST. Section 22, persons liable for registration. Section 23, persons who are exempted from registration. Section 24, cases where registration is compulsory irrespective of turnover. Section 25, procedure for registration. Section 26, deemed registration. Section 27, special provisions for casual taxable persons and non-resident taxable person. Section 28, amendment in registration. Section 29, cancellation of registration. Section 30, revocation of cancellation. Let's start with 22. If I am supplier of goods, exclusively goods, only goods, okay, then for me, there is a higher threshold limit. What is that higher threshold limit of aggregate turnover? That higher threshold limit of aggregate turnover is 40 lakh rupees. Okay, but if I am in state of MMNT, then what is the aggregate turnover limit for me? In MMNT states, the aggregate turnover threshold limit is rupees 10 lakhs. What does this MMNT stand for? MMNT stands for Manipur, Mizoram, Nagaland, Tripura. Clear? All of you with me, guys? Yes. Once say in the chat window if you are with me. Then, if I am talking about SAMPUT, that is, what is SAMPUT? Sikkim, Arunachal Pradesh, Meghalaya, Puducherry, Uttarakhand, Telangana, then always the aggregate turnover threshold limit is rupees 20 lakhs. Okay. Further, guys, if I am in any other state and if I am dealing in goods plus services or only services, then always the aggregate turnover threshold limit is 20 lakhs. I need to take registration only. I need to take registration only in that state. I need to take registration only and only in that state from which I am making taxable supply. Okay. Further, if one of my unit is in that state, which is a notified special category state, and another unit is in normal state, then if I am making taxable supply from notified special category state, then the overall limit falls down. Okay, all these things I have to keep in mind while deciding whether I am liable for registration as per section 22. If I talk about 23, who is not at all liable for taking registration, then number one, agriculturist to the extent of his agricultural produce. Second, person who is engaged exclusively in supply of those goods or services which are not liable for GST or which are exempted from tax. Further, 23(2) gives right to central government to notify certain goods or to notify certain cases where registration is not required. Section 24, cases where registration is compulsory. Number one, for supplier who is engaged in interstate outward taxable supply of goods. Second, agent in principal agent relation. Third, input service distributor. Fourth, who is fourth, guys? Yes, tell me. Person who is liable to deduct tax at source. Then e-commerce operator who is collecting TCS. Getting my points, guys? Yes. Then for whom else is registration compulsorily required? CTP, NRTP. Then ECO, who is liable to pay GST. ECO as mentioned in 9(5), that ECO. Clear, all of you? Then any supplier of service from outside India who is supplying OIDAR service to a person in India who is unregistered. Okay, so in all these cases, registration in India is must for under GST. Then 25, procedure for registration. Tell me that within how many days from date of becoming liable for registration I should apply for registration? I should apply for registration within at least 30 days. If I make application within 30 days, then the effective date of registration is the date when I became liable for registration. But if I don't make application within 30 days, then effective date of registration is date of grant of certificate of registration. Okay, then registration in GST is PAN based, isn't it? Registration in GST is PAN based. But in case of NRTP and in case of deductor of tax at source, any other documents can be accepted. Further, state-wise there is separate registration in GST. That too we have understood. State-wise there is separate registration in GST. Then 26. What is 26? If I am registered under SGST law of any state, it is deemed that I am registered under CGST. Further, if I am rejected registration under SGST, it is deemed that I have been rejected registration under CGST. Clear, all of you? 27. Special provisions for casual taxable person and non-resident taxable person. Casual taxable person defined in section 2 clause 20 of CGST Act. Non-resident taxable person defined in section 2 clause 77 of CGST Act. Common point in CTP and NRTP is that both of them are occasionally carrying out business in a state where they don't have fixed place of business. Further, non-resident taxable person does not have fixed place of business in India. Yes. So these are the common points in their definitions and in the concepts. Now, what are the special provisions for them? CTP and RTP should make application for registration at least 5 days prior to commencement of business. At the time of making application itself, they should pay GST in advance on estimated basis. Okay. Further, their registration as CTP or NRTP will be valid for maximum period of the application for which they have made, the number of days for which they have made the application, or 90 days, whichever is higher. In short, the maximum number of days for which I can be registered as a CTP or NRTP is 90 days. This can be further extended for a period not exceeding 90 days. Okay, so are all provisions of CTP and NRTP clear to all of you? Means you could able to recollect to this? Yes. Section 28, amendment in registration. Amendment can be easily made of non-core fields. Non-core fields means your email ID, your phone number. This can be easily changed on the GST portal, common portal, that is www.gst.gov.in. You can log in your common portal and you can change your non-core fields. But to change your core fields, you need to make an application in advance. Core fields means nature of your business. Core field means change of your address in the business, where your state itself is changing. Clear? And then 29, cancellation of registration. Proper officer can suo motu cancel registration in certain cases. What are those cases? Those cases are, guys, very simple. Number one, tell me, guys, what are those cases? Number one, you have taken voluntary registration, but you did not start business for continuous 6 months. You are not filing your GST return from, within 3 months from 30th April, means you have opted for section 10 and you are not filing the annual return. You are not filing the return under GST, okay, within 3 months from the due date of filing return. Okay, then you have not opted for composition scheme. You are paying tax under regular scheme, and in regular scheme you have opted for QRMP, quarterly return monthly payment, and you are not filing GST return for continuous 2 quarters. Further, you have not opted for QRMP. Suppose you are paying GST on monthly basis and you are supposed to file return on monthly basis, but you have not filed a return for continuous period of 6 months. In these cases, your registration could be cancelled by the proper officer on his own motion. Further, if you obtained certificate in GST by way of fraud, then also it can be cancelled. Or if you have not complied with any of the provisions of GST law, then it can be cancelled. Section 31. 31, tax invoice. Okay, tax invoice. You know many of the important provisions in tax invoice. Okay, so tax invoice for goods, when to issue, you know that. We have already discussed while doing time of supply. Tax invoice for service, when to issue, you know that. We have already discussed it while doing, again, time of supply for services. But friends, do you know what is continuous supply of goods? So continuous supply of goods is recurring supply of goods. Okay, by way of conduct like wire, pipes. Continuous supply of services means you are continuously supplying service for more than 3 months. Okay, where periodical payment is expected to come. That is called as continuous supply of services. So these points you have to remember while making invoice. When to make invoice, that will be affected by these facts. Clear? Further, most important point in this tax invoice, if you are making a sale on approval basis. Do you understand? You are making a sale on approval basis. So if opposite party does not approve, then your sale is not complete. Your sale is complete only when opposite party approves. So in this case, you will not make invoice when you remove the goods. You will make invoice when the opposite party accepts the supply. In short, when to make invoice in case of sale on approval basis. Make invoice at the time of supply or within 6 months from the date of removal, whichever is earlier. In short, there is a time limit for making the invoice. That is within 6 months from the date of removal. In short, opposite party does not accept the supply within 6 months, then you should make the invoice. Then also you should make the invoice when 6 months are going to expire. Clear? So all these points you should keep in mind in 31. 34. What is 34? 34 is your debit note and credit notes. Debit note is issued when you want to increase the value of supply. For example, you have charged interest, late fees, penalty. You will issue debit note. When will you issue credit note? You will issue credit note when you want to decrease the value. Like when you have given discount after supply, you will issue credit note. So friends, my question to you is very simple. Government wants you to issue debit note. Do you agree? Because that will increase the value. But government does not want you to issue credit note because that will decrease the value. Yes. So there is a time limit for declaring the details of credit note in the return of GST. What is that time limit? That time limit is same like 16(4) time limit for availing ITC. That is 30th November following the end of the financial year to which the credit note pertains, or actual date of filing annual return, whichever is earlier. Agreed. Further, against one invoice, can you issue multiple debit note, credit notes? Answer is yes. Second case, against multiple invoices, can you issue one debit note, credit note? Again, answer is yes. So all these small points you should keep in mind in case of debit note and credit note. Then section 68, e-way bill, electronic way bill. Do you understand what is e-way bill? When to make this e-way bill? This e-way bill will be issued when the consignment value exceeds rupees 50,000. What is the meaning of consignment value? Consignment value means assessable value as per section 15 plus GST. When that exceeds rupees 50,000, you should make e-way bill. E-way bill will track the movement of the goods. Who will make the e-way bill? Either the supplier will make the e-way bill, okay, or the one who causes the movement of the goods will make e-way bill. E-way bill will be made in GST EWB 01. Getting it? That will have part A and part B. And consolidated e-way bill will be made by transporter for against various e-way bills, and that will be in form GST EWB 02. Do you know what is the validity period of e-way bill? Validity period of e-way bill means particular e-way bill will be valid for how many days? It all depends on how much kilometers that particular conveyance has to travel. E-way bill is like you have to travel at least 200 kilometers in a day. How many kilometers in a day? 200 kilometers in a day. So for every day or part thereof, for every for every 200 kilometers or part thereof, you get 1 day. For example, my goods vehicle has to travel 435 kilometers. So I will be given 3 days for completing that journey. So my e-way bill, in short, will be valid for 3 days. How did we get to 3 days? For first 200 kilometers, day 1, for next 200 kilometers, day 2, for next 35 kilometers, day 3. Getting it? This is in case when the transport is by way of other than over-dimensional cargo and where there is no multimodal transport involved. But if there is over-dimensional cargo or multimodal transport involved, where one of the mode is by way of ship, then guys, this kilometers instead of 200 becomes 20. In short, you have to take your goods for 110 kilometers, then you will be given a validity of 6 days. If you have to take your goods 110 kilometers in this over-dimensional cargo, then time limit given will be 6 days. Why 6 days? For first 20 kilometers, 1 day, next 20 kilometers, second day, next 20 kilometers, third day, next 20 kilometers, fourth day, next 20 kilometers, fifth day, and last 10 kilometers, 1 day. Clear? All of you? Then, so this 68 which we are checking for e-way bill, it is read with rule number 138, and then I understand all these things. Then guys, 35, 36 is accounts and records. 37 to 48 is filing of returns under GST. Clear? What is accounts and records? So accounts and records should be maintained for what time span? Accounts and records should be maintained for at least 72 months. How many months? At least 72 months from due date of filing of annual return under GST for the relevant financial year. Okay. Then guys, when I talk about GST return, then which is a statement of outward supply? Statement of outward supply is GSTR 1. By what date GSTR 1 is to be filed? GSTR 1 is to be filed by 10th of the subsequent month. Then, on the basis of this GSTR 1 filed by supplier, government prepares GSTR 2A/2B of recipient of supply by 15th of the month. Then, now, every registered person now knows his output tax because he has filed GSTR 1 and his GSTR 2A 2B is now generated by government. So there is output tax available and he knows how much ITC he has. So he can do output tax minus input tax credit, pay the GST to the government in GST PMT 07 and then file GSTR 3B. GSTR 3B will be filed by 20th of the month, following the month. So for example, if all these things are happening for the month of August 2024, then GSTR 1 will be filed by me by September 10th. Government will generate my GSTR 2A 2B by September 15th. Then I will pay tax to government between September 15th to September 20, and then I will file my GSTR 3B by September 20. Is the procedure clear to all of you? Then this I will continue doing for all 12 months. Then finally, I will file annual return in form GSTR 9. Due date of filing this annual return is 31st December following the end of the financial year. Okay, following the end of the relevant financial year. For example, for 24-25 financial year, GSTR 9 will be filed by 31st December 2025. Wonderful, wonderful. And then already we know, so these things which I told you were for that person who has not opted for section 10, one who is paying tax as per regular scheme. If you are paying tax as per regular scheme, what I told you right now is when you have not opted for quarterly return monthly payment, you may opt for quarterly return monthly payment scheme. Who can opt for QRMP scheme? Those registered persons whose aggregate turnover in the preceding financial year is not exceeding rupees 5 crores may opt for QRMP. If they opt for QRMP, as the name suggests, I have to file the return on quarterly basis, but I have to make the payment on monthly basis. Payment can be made on monthly basis under fixed installment. Okay, that is fixed sum. Yes, it can be done on the basis of fixed sum. Or getting it clear? Yes, it is just like a breathless going on. Did you get all the points? And then you already know that if you are in section 10, you will file GST, you will pay tax on quarterly basis by uh, giving information in GST CMP 08, and then annually you will file GSTR 4 by April 30 after the end of financial year. Okay, then guys, 49 is payment of GST. Already we have studied 49.5, utilization of ITC to pay output tax. You know that sequence. 49.5 was read with 88A, rule 88A, and then section 49B and 49A. So you have understood that. Apart from that, what happens in 49? Okay, in 49 they have given you, if there is a earlier due of GST, current due of GST, demanded due of GST, then in what sequence you should make the payment. So you should first make payment of earlier dues, then you should make payment of current dues, then you should make payment of demanded dues. Further, one more point I want to tell you, that is, what all things are there in the e-cash ledger. In e-cash ledger, what all columns you will have? You will have column of output tax, interest, late fees, penalty, and others. These are called as minor heads. What are they called as? Minor heads. And what are the major heads? Major heads are CGST, SGST, IGST, CES. Okay. And can you use tax amount in one major head to pay some tax of minor head? The answer is yes. Earlier this was not possible, now it is possible. Further, there is one more critical point. If you have your entity in Maharashtra and one more of your unit is in Karnataka, basically having same PAN, now but different GST numbers, there is a balance in your e-cash ledger in Maharashtra. Can that be utilized? Can that be transferred to e-cash ledger in Karnataka? So there exists a procedure for this. Understand this. So this type of transfer is possible. Then guys, section 50. What is section 50? Section 50 is interest for delay in payment of GST. What is the rate of this interest? Rate of this interest is 18% per annum. Again, 18% per annum for the number of days for which the delay continues. For example, if delay is there, suppose on 20 September was the due date of payment, but I paid on 12th October, then there is a delay of 22 days. So interest will be calculated for that 22 days. So calculation will be GST payable multiplied by 18% per annum multiplied by 22 upon 365. Clear? Yes, sir. Absolutely. Then friends, after that, what I have to understand is section 51 TDS. In TDS, what I have to understand, that TDS will be done only in notified cases. Who has to be the deductor that we have seen. Now, what is the rate of TDS in GST? Rate of TDS is 2%. Okay, so if it's an intrastate supply, then it is 1% CGST, 1% SGST. If it is interstate supply, directly IGST at 2%. Further, TDS provisions will apply only if contract value exceeds rupees 2,50,000. Isn't it? Going ahead, when is there no TDS situation? No TDS situation is there if location of supplier and place of supply is in a state which is different than location of recipient of supply. You have seen the logic also why it is a no TDS situation. Then friends, finally, TCS section 52. So who will do this TCS? I told you e-commerce operators like Amazon, Flipkart will do this TCS. When they will do this TCS? They will do this TCS when they are collecting the money from customers on behalf of various suppliers listed on their platform. This TCS will be done at what percent? This TCS overall percentage is 1. So 0.5% CGST, 0.5% SGST. Is it absolutely clear to all of you? All these provisions. And finally, 53 is transfer of credits. What is transfer of credits? Transfer of credits, first of all, is not a provision to be followed by registered person. It is a provision to be followed by government. So when I use my ITC of IGST, then what government should do, from their IGST, they should reduce the balance and they should transfer it in CGST, SGST. If I have used ITC of IGST to pay output tax of CGST and SGST, what government should do? Government in the government account should reduce the IGST balance and they should transfer that to CGST and SGST. This is called as transfer of credits. So that is a guideline for government. And guys, finally, two sections in IGST Act we have to see. That is section 10 and 12 of IGST Act. What are these provisions of? 10 is place of supply of goods other than in case of imports and exports, and 12 is place of supply of services where both supplier and recipient of supply are in India. Do you agree? Yes. But sir, why we have to see place of supply? We have to see place of supply because whether it is CGST plus SGST or whether it is IGST, it depends on two factors. It depends on location of supplier and place of supply. If location of supplier and place of supply is in same state, it is an intrastate supply chargeable to CGST plus SGST. If it is in different states, it is interstate supply chargeable to IGST. Isn't it? Now, what is location of supplier? Usually location of supplier is that place where is registered. But what is place of supply? That exactly is given in 10 and 12. So, for goods, subsection 1 and subsection 2. Subsection 2 will be as prescribed. If any, it cannot be covered in 10.1. But 10.1, what are the cases we have to learn? 10.1, clause A. Clause A, where supply involves movement of goods. Place of supply is location of the goods where this movement of goods terminates, where it terminates for the delivery. 10.1b, most critical, place of supply in case of build to ship model. In case of build to ship model, place of supply is principal place of business of that third party on whose direction the goods have moved. Getting it? Do you remember? A is sending goods to C but on direction of B. Then place of supply is location of B in this transaction. Getting it? We are not talking about supply between B and C. For supply between B and C, place of supply will be determined as per 10.1a. Then guys, 10.1c. 10.1c, supply does not involve movement of goods. Then no problem, where the goods are made available. Then 10.1ca, newly introduced, 10.1ca, over the counter supply to an unregistered person. What is the place of supply? If address of recipient of supply is there on the invoice, place of supply is location of recipient of supply as per that address. If address is not there, then place of supply is location of supplier. 10.1d, where there is the installation involved of goods, place of supply is location where such goods are installed or assembled. 10.1e, where goods are supplied on a conveyance, on board a conveyance. The place of supply is where such goods are taken on board of the conveyance, that is loaded on the conveyance. Then guys, lastly, in this particular quick session of revision, going for section 12. Section 12 has how many subsections? Section 12 has 14 subsections. One is introduction. Two is Residuary, if your cases cannot be covered in 3 to 14, it will be covered in 2. In 2, what is the place of supply? If given to registered person, location of such person. If given to unregistered person, then address of that unregistered person as it exists on the record of the supplier. If address does not exist, then location of supplier. Then guys, 12.3, services in relation to immovable property like accommodation, architect, civil engineer, place of supplies where the property is located or intended to be located. But if property is intended to be located outside India, place of supply is location of recipient. Further, if the property is intended to be located in more than one state, place of supply is each of such state. 12.4 in some proportion, of course. 12.4 is performance based service. Place of supply is where the service is actually performed. 12.5 training service. Training service given to registered person. Place of supply is location of such person. Given to unregistered person, that is where the training actually takes place, is the place of supply. Okay, 12.6 admission to an event, amusement park. Place of supply is where that park is located or where that place is. 12.7 event management services given to registered person, location of such person. Given to unregistered person, where the event takes place. But if event takes place outside India, place of supply is location of recipient of supply. In such B2C case, if event takes place in more than one state, place of supply will be each of such state where the event takes place. Then guys, 12.7 so we have seen. 12.8 goods transportation service. In goods transportation service, if given to registered person, location of such person, given to unregistered person, where the goods are handed over for their transportation, is the place of supply. 12.9 passenger transportation service, given to registered person, location of such person, given to unregistered person, where the passenger embarks on the conveyance for continuous journey. Here, the continuous journey has got an explanation. If it's a return journey, then outward journey and inward journey, these two journeys are to be treated as separate journeys. Further, there is one more point in this. If in this B2C case, passage time, for passage time a pass is issued where point of embarkation is not known, then the place of supply will be determined as per 12.2. Then guys, 12.10 is services given on board a conveyance, place of supplies where the point of where the first scheduled point of departure of that conveyance is. 12.11 telecommunication services. In case of fixed telecommunication services, place of supplies where that fixed telecommunication line is installed. If it's a mobile, then there could be postpaid, prepaid. In case of postpaid, address of recipient of supply which exists on the address of recipient of supply, billing address of recipient of supply. Prepaid, in prepaid what happens? In prepaid, it could be done online, it could be done by physical voucher. If it is done by physical voucher, then address of the reseller or distributor on the records of the supplier. Okay, if it is done by any other mode, then where it is actually done, that recharge, that becomes place of supply. And finally, if it is done online, then address on the records of supplier, whose address of recipient on records of supplier. Then friends, 12 is banking service. In banking service, if location of recipient exists on the records of supplier, means if address of recipient exists on records of supplier, place of supply is location of such recipient. If it does not exist, then place of supply is location of supplier. 12.13 insurance services. If given to registered person, location of such person. If given to unregistered person, address of such unregistered person on the records of supplier. And last thing in this particular segment, 12.14 advertisement services given to government. Place of supply will be each of the state in which the information is disseminated by way of this advertisement. Thank you so much guys. It took 70 minutes to complete this revision. It was my pleasure to guide you all. See you in the next segment where we will do some concepts in detail. Thank you so much. I wish you all the very best. I hope you have enjoyed this revision a lot. Bye bye. CA Pratik Neve signing off in for this segment because I'll have a water and come back for the next segment. Thank you. All the best.